Hey everyone, it is Evan here from the Trade Risk on Friday, October 4th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So it was a very eventful week. We had lots of volatility out there. Markets had a 4.5% range in the S&P 500 from high to low. Ultimately, we did close well off of the lows, but easy to get whipped around and succumb to some of the volatility this week. But let's jump into the dashboard here and take a look at what went on. You can see Friday we closed strong here across the major indices. Everything was up pretty much 1 to 1.5%. 5-day change numbers mostly red, but certainly recovered quite a bit of ground here on Thursday and Friday. Notice the Qs though now out in front, leading and outperforming the pack here on a relative basis. And we are still below the 10 SMA across most of these indices except for the Qs, but notice we also did reclaim the 50 SMAs towards the end of the week. Some of those have flattened out a bit, but we did get back and recover some of that ground. When we scroll down and look at sector performance, you can see semiconductors, tech, and healthcare up and to the right here, kind of leading the pack to the upside, and we still have energy, transports, and materials on the downside here, strongly in negative territory over the past 5 days. If we look at markets, major markets, we see TLT rallying this week, up over 2%, followed by China equity markets and the 10-year bonds. When we look here at the downside, we have oil, we have natural gas, and we have actually high yield, which is something we haven't seen in this lower end in quite some time. But we see high yield coming off minus 0.72% over the past 5 days. So let's jump into the charts here. Let's try and make sense of what went on. We like to start our analysis with the S&P 500 weekly time frame. So each bar on this chart represents 1 week worth of trading. And first, just note the size of this candle here for this week's trading. Again, it was a 4.5% range from high to low. We got all the way down to 28.55 towards the bottom end of the August trading range in the S&P 500. And look how much we reversed and recovered here in just 2 days worth of time. Basically, all of Thursday and Friday accounted for this bounce here off of the lows and a close back right into this critical zone here that we were paying attention to and really keying off of here over the past couple of weeks, this 2940 to 2950 area. That was the line in the sand. That was sort of what we were looking at for this market to hold above, to keep things acting as bullish and healthy as possible. And that basically coincided with the breakout that we saw in September, kind of the upper end of the August range. And while we certainly came crashing down it for 2 solid sessions on Thursday or Wednesday and Thursday, we made our way back above it on Friday on a weekly basis, closing at or in this zone here to finish out the week. So I think that is a very important indication here going into the weekend. It is early yet to say that this is stick and that this will stick and that the lows are in and all of the worst is behind us. I don't think we can make that claim yet, but I do want to give credit where credit's due here on the size of this reversal and the fact that we could get back up there to finish off the weekend. This could easily have been a Friday where we just sort of rolled back over. There's fear into the weekend, more of the headlines, more of the news that came out to really keep this market on edge in terms of everything that basically hit the tape this week in terms of headlines, but instead we got a strong price action reversal. So what we want to see next week again is kind of the same area hold. I'd like to see us maintain the bounce that we put in here Thursday and Friday to not just immediately fall back down into this range. I do still believe it is important here to hold above this August range and this chop and to keep us over this 2940 area. So next week we're going to see if the bulls can continue to kind of step in here on these dips and keep this market elevated back up at these levels or higher. So that's what we're looking at there. On the upside again, Really, it's it's the all-time highs up there. Particularly, when we think about where we finished off here and this bounce, we once again are only about 2.5% away from all-time highs. So we are still, in the context of things, still in this shallow pullback. We've certainly had, a 5-6% pullback on the lows here of this week. But so we definitely stirred the pot. But where we closed right now, we're about 2.5% from those all-time highs. If we look at volatility this week, you can see the VIX actually closed down on the week. It was only 1%, so it was basically a flat week. We got north of 20 here in the intra week. We got north of 20 for the VIX, but you can see that came all the way back down and settled right at 16.99 to finish out the week. So basically exactly where we closed last Friday is where volatility finished out for the week as well. Now, if we go to the Russell 2000, this is still kind of the thorn in the market's back. It has been reluctant to really participate and perform and show some signs of life over the past many months now, year plus. But the Russell here on the week finishing firmly in the red, minus 1.33%. You can still see a clear bounce off of the lows, but still just when we look at the structure here of the Russell 2000, it certainly didn't break down. It didn't make new lows. It didn't undercut the August range. It's simply just going sideways here, and it's kind of more of the same, kind of more of the chop, but it is on the lower half of this range that it's been in for pretty much all of 2019. So really, we can't say we can't get too excited here about the Russell as it puts in a weaker bounce relative to the rest of the markets and finished down well over 1% on the week. The NASDAQ 100, though, is in the other category. This is what is now helping kind of firm up the best. I don't want to say lead the market necessarily yet, but it certainly did, help and act resilient here on this Thursday, Friday bounce. You can see we were actually up 1% this week in the NASDAQ 100, and just like the S&P 500, we did break back down and come all the way down towards the lower end of the August summer range here. We got as low as 181 and change here throughout the course of this week, but we finished well within the body of last week. We have a much more sort of convincing reversal here, and I suspect that if this market is going to kind of bounce from here and not look back, so to speak, it seems like the Qs are in the best position here to potentially get that follow through and to help us sort of move out of the weeds here from some of this volatility that we experienced this week. So take a look at the Qs. They're where some of the strength is. The Russell 2000 still pretty garbage there in terms of its price action and what it's been able to add to the overall market. And finally, the Qs the SPY is pretty much in the middle of the road. And, we want to think, again, we don't want to predict anything. We don't want to get ahead of ourselves at all, but we want to think, even looking at this action here, it's still quite tough to chase this in the short term because it's still very unclear whether or not these lows will stick. But this is the type of sort of uncertainty and the large range kind of wash out short-term, intermediate-term bottoms that can lead to those very fast moves in the opposite direction, those V-shaped rallies like we've seen so often over the course of this bull market. I'm not calling for one. I'm not saying that that's even the most likely scenario, but I think it's worth having an open mind and a strategy in place to think about what happens if this market just wants to take off from here and leave everyone sort of either stopped out or worrying about the recession and everything else that went on here this week. Don't forget, we also have earnings season coming up. It's still a little bit early. It's not yet, but it is going to be around the corner in about 3 weeks time. We'll start getting some of those companies to report, so we'll keep that in the back of our mind as we sort of navigate. So all in all, a very eventful week. If we look at that daily chart, I don't think we looked at any daily charts here. If we look at the daily chart of the S&P 500, just again, look at the past 4 sessions here. So this is just the daily chart of the S&P 500. And look at the range here on these past 4 trading sessions. You can see they were very elevated, the size of the bodies there, size of the action that took place, and the ground that we covered was extreme or was elevated, certainly larger than we've seen in recent past. But all in all, trying to close back up over this August range, and next week we'll see if we can get some follow through. So let's get on to some other major markets now. We'll go to TLT next. Weekly chart, you can see this continued to move higher here, so the uptrend is very much still intact here as we work our way back up to the prior high set here in August. Looks like we got a bit of a date here with about 148 or so to potentially retest those highs. Be interesting to see what type of reaction and how it firms up or how it acts back up at those levels if we can get up there next week. TLT is up 7 days in a row, it looks like right now. Some of these days in here were fairly marginal up days, but still 7 days in a row definitely has seen a good move there to the upside. USO, if we go there next, energy, you can see this had a pretty difficult week, 5.25% here to the downside. This is kind of the second week in a row now, really the third week in a row. If the first, going back to the 20th here, this is when we had that big gap up in oil. Big kind of futures move there on Sunday, and then we started to reverse course off of those highs from $13. We followed through to the downside last week, and we put in another kind of follow through week to the to the downside this week as well. We are back to prior support here, so again maybe a bit of a hold, a dead cat bounce so to speak, back up into this range seems seems reasonable here given the fact that we've been down 8 days. We went down 8 days in a row in USO and finally turned around here on Friday. So we'll see if we can put in a small bounce there, but overall seen a lot of selling pressure over the past week's time. Natural gas did try and put in some type of reversal this week. It was still down 2% here on the week, but look at the volume that came back in today, or this week rather. It's the heaviest volume week now we've seen going back to earlier this year. If we go back down to a daily chart, again, you can see most of that volume came in here on Thursday. So we were down 9 consecutive days, it looked like, in a row here for natural gas, or give or take 9 days. We put in that large high volume reversal, kind of a bullish engulfing bar on Thursday. We tried to add a little bit to it here on Friday. So it does seem like this deep retrace that we just saw, trying to stir up some buyers back in here around the $19 area in natural gas. Last but not least, if we look at metals, GLD mostly sideways here this week. It was up 0.5%. It was down early in the week, but it did reverse and just kind of close in the middle of this range here. So it looks like it's well on its way to start consolidating or continue consolidating. And if we look at silver here as well, you can see that this did close higher on the week just slightly. It was down to $16 or just south of that. It did close up a little bit, and it does still seem to be working in its sort of consolidation pattern as well since the start of September. So that covers all of the majors. Let's take a look at sectors here, what performed and what didn't. On the upside, we have semiconductors at the top of the list here. You can see, take a look at how, fairly resilient, and actually, if we want to make a good bull case here, semiconductors looking quite interesting here as they're already bumping back up into resistance. So semis, unlike, say, the S&P or the Russell or the Qs, everything we looked at the beginning, all of those major indices came and clearly undercut and fell within the August trading range. Look at semis though, all they did was basically fill the gap and just retest. This was exactly what we wanted to say, exactly what we talked about for our bullish scenario for the markets, was essentially a successful retest hold of the August trading range. And when we look here at just what the semis did, they did exactly that. They came back down, they retested the August trading range, it held, and it acted as a springboard, and now it's attacking this downtrend line. Again, this looks good at potentially breaking out here. So again, if we're going to lead, I think NASDAQ 100, like we talked about, is a good market to watch for the major indices, but then it's really semiconductors, I think, if you want to drill down even further and look at how these act next week, because these do seem like they want to be, and they have been the leaders for this market for quite a while, but they look like they are in a position where they could kind of resume that leadership role. So semis kind of like the move here, and we'll see if they can actually start to break out. XLK, again, kind of it's the technology spider ETF here, so kind of a similar cut there to semis. But healthcare also, you could argue that healthcare was one of the first to sort of start to break down a couple of weeks ago, so they're sort of recovering from those more oversold conditions. Again, this has been just really a sideways choppy mess here for quite some time. We attempted to break out just a few weeks ago, that failed, so it does have a lot more to prove. Really needs to get over that $92 area to start making some more cleaner progress to the upside. On the downside this week, 3.77% lower was energy. You can see energy came all the way back down to basically the lows of August here. So it essentially retested the lows, and we already know that the August lows were quite a big retracement down to even where the January lows started. So energy, just on a relative basis here, has been fairly poor performer over the past several months. We do have some positive momentum divergence here as it retested these lows. So combine that with some probably, near-term stretch conditions to the downside. It does seem like energy could bounce here, but still on a relative basis, it's been a fairly poor performer. XLI also, you can see here, number 2 underperformer this week, down 2.5%. You can see this came with a deep retracement, deep fallback into the August range, almost to the lower end of this range. It too also is quite stretched, could lead to a nice little bounce there, but still pretty weak there on a relative basis. And materials also kind of coming back all the way to the lower end of this August range. In fact, you can see on Friday, didn't even get enough strength here to fill the gap down that we saw on Wednesday of this week. So some clear weakness here in materials. 56 is still a pretty important area to try and hold. It is back above it, so it is, again, trying to hold some of those longer term important levels that have mattered in the past. We'll see if it can continue to hold above there, but this week certainly was underperforming. So that is it. That is the weekly recap for this week's of trading. Lots of going on there, lots of volatility, very easy to get turned around and whipsawed a bit. No, certainly I got stopped out of a handful of names through this latest leg down, so it will happen with moves like we saw, but have a plan and stick to that plan, manage risk, all those fun things are what's going to keep you in the game and back on your feet going forward. So that's it for me. If you like the videos, you can subscribe on our YouTube channel, follow us at thetraderisk.com. Otherwise, have a great weekend, and we'll see you back here on Tuesday of next week for the midweek video.